Well, at the track, they'd say, "What's the late money doing?" I'll discuss that in more detail when Triple D comes on. A little bit of weakness in tech yesterday. Retail comes to the rescue. Lululemon. We got a good guest today. We have the CEO and founder of LivePerson. UBS woke up on the wrong side of bed this morning. Got a slew of downgrades. We're going to cover the market action and much more here on Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right. Good morning, traders and investors. Welcome to this so far nice Wednesday morning. We're up 34 handles at 40.3550, just off that pre-market high at 40 and a quarter. That should be a familiar number to you guys and gals. The Bucks down almost 6 cents, 102.05, trying to find some support here at the 102 area. Bonds are flat. That's nice, just under 130. Crude continuing its run up 81 cents at 74.01. Where's resistance in crude? We'll have to look at that. Gold making its way back towards 2K, up 12.50, 1986. Silver, that's down 7 cents, going the opposite way, 23.35. And Bitcoin back in the 28K handle. That's up $935 at 28,390. So Triple D, do you know what I mean when I said, I'm talking about the late money at the track? Do you know what I'm talking about?
Yeah, I was always late money too. You want to go in once they start, the horses start going. There's still bets at a certain point in time, correct?
Well, actually, that brings me to an interesting story.
Uh-oh.
First of all,
opened up a can of worms here.
The true late money is like the money, because theoretically you're supposed to be able to right when the race starts, the bell goes off, you can't bet anymore.
Yeah.
But a lot of times, a minute or two before the race goes off, you see a big move in odds.
Yeah,
and that's the late.
Everybody waits till the last second to figure out what the odds are going to be. Because if you place it early, as more money goes on the horse, the odds go down. So there may be somebody, this one's really, this one should be like a 5-1, but it's going off at a 10-1 here. So you want to do it at the last second, and then you're trying to put it on, but everybody else is doing it, and it changes the odds all around.
Right, but like the hammer, like the people that are in the know, a lot of times they'll slam their money down at the last second. And so you see a horse, it's like a lot of times I'm looking at a horse, he's 8-1, 8-1. Then all of a sudden I look and boom, he's 3-1. And I'll be like, oh man, someone knows something. And then, whether the horse wins, another thing. But just real quick story on that. My dad used to go to the races back at Northville Downs when he was in college. And they were slow at closing the windows. Okay. So he would actually he would find, so they would leave the gate. All right. And a lot of times especially at Northville, it's only a half-mile track. You got to make, 4 turns. Right. So getting that start is really important. So they would pick a horse and they would decide, like if he broke, you would have like maybe 10 seconds. So if the horse left the gate good, they'd have 3 guys and they'd hold up a program. And if the horse got off good, the guy would drop the program. He would relay to another guy in the grandstand, who would then relay to my dad at the window, who would make the bet.
You had a system.
Do you see all this? This is all I got to say.
It's an exciting sound. Joel's excited now.
Joel's getting ready. He sees the horse. He sees the horse coming up. He's like, you know what? I want that one now.
All right. Stonks. Dennis.
So anyways, how was that related to the market? You were going to tell a story on
that's right. I got it.
I'm trying to tie it all in.
You got to bring it back.
Sorry.
You're like, we're just talking horses.
The late money. What happened in the last 15 minutes yesterday? There, here we go. The 15-minute chart. I mean, boom, we were looking like, okay, maybe we're going to go down and test the low, right? Look at the last half hour, last 45 minutes, right? And then you didn't even get a look at the closing price, right? So the late money there came in, and then the after hours buyers, Dennis, you had to feel them. You had to feel those after hour buyers, right? I mean, we never even went scratch on the session. The reason I know that is because I was trying to buy the close, and they laughed at me. So late money's right. We're back up, but Dennis, you're not impressed with these earnings.
I'm not impressed with the earnings, but I'm impressed with the action to the earnings. And Kramer made a good point last night on Mad Money, and he was talking about the reports from PVH. He was talking about the reports from Walgreens. He was even talking about the reports from MKC, and then he was tying it in with the report from Lululemon last night. He said, you know what all these reports have in common? All the stocks rallied significantly on them, and they weren't great reports. And I'm like, you know what? It's a good point, actually. These weren't blowing it away numbers on a lot of these. They were good numbers. It just shows you that expectations are in the gutter. So that is the one big case that the bulls have here, is that any type of good news. And this market just buy stocks because they're so hungry to buy stocks. They want to buy stocks, but the news flow has been so bad, and I predict the news flow is still going to be bad, which is why I'm not participating. But that is what is happening. Any type of good news, and they got to buy stocks.
All right, Mitch, Lululemon numbers, and then, oh boy, what a nice setup on the charts.
All right, let's talk about Lululemon here. Q4 adjusted EPS, $4.40, beat the $4.26 estimate. Sales at $2.77 billion, beat the $2.7 billion estimate. Lulu sees Q1 revenue to $1.89 to $1.93 billion versus a $1.85 billion estimate there. EPS to $1.93 to $2. Now, fiscal year outlook also not looking too bad. High end to $9.41 billion and EPS high end to $11.72. And of course, we can't forget, and I think Joel mentioned this on the pre-show, guys got to always stay sharp, right? Well, he knew about that. Remember, on January 9th, they did narrow this guidance from Q4 EPS guidance of about $4.20 to $4.30. They narrowed it to $4.22 to $4.27 here on the estimate outlook, right? And so we actually came in way above that outlook there. Remember, EPS came in at $4.40, beating the $4.26 estimate there. So it looks like that lowering of the bar definitely helped them get that bar right back up.
And maybe that was a good idea, I guess, for them. I know the stock got hit on it, but you're right. Like, there was expectations were in the gutter here. Now it's like, oh, this wasn't bad at all. And now the stock's up $55, up 17%. They can't stop buying it all night long. The initial action took it up 10. And then I don't know, Joel, if you can zoom in on the chart there right now. You've got quotes over it, so we can't even see the chart.
Right here.
But the initial action, actually, if you zoom and make it bigger, it went up about 10, 12 points, and then she tanked. And it went all the way down to like 311. And I was looking at it too, and my buddy from Bray Trading was texting me. He's like, why did Lulu just go red? And I'm like, I don't know. Did they say something? Because the quarter I thought was good. It was down there for like less than 30 seconds. And then they brought it right back up. So I'm not sure why. The algos decided all of a sudden they had to hammer it down, but it dropped about $20 in about 20 seconds. Maybe it was just a big seller coming in. Then they started buying and buying and buying, and they never stopped. So somebody got a pretty good deal. This thing actually went red on that quarter.
Wow, I did not see that price action. I just drilled it down to the 5
minutes. I wouldn't have either, but then my buddy from Bright was texting, and he's like, why did Lulu just go red? I was like, did it? It was just up 15. I'm like, oh my gosh, it is. And then I was like bringing it up, and I was like, it's already going back green. Maybe it was just like a big seller coming. I never looked at the tape, but it dropped about $20 in 20 seconds, right? About maybe 3 minutes after the print. So they had the big initial pop, algos, and then they dropped her. And that's why nothing's easy, eh? Like, even if you're buying it up 10, you're like, oh, they're going to really rip this thing. Then it falls 20 on you.
You're
dead. Pretty good shakeout probably for some people there. And then it rips the 50.
Well, I think a couple things that had a nice pre-earnings rally. So maybe, if you didn't get short, if you didn't cover short, I don't know how heavily shorted this stock is. That's one thing. But what an interesting chart. This gap down here was from last quarter's earnings, right? And then they gave a little warning here, worried about margins. There's another gap there. And now you're back here. The pre-market high comes in at 372, no, higher than that. The pre-market high comes in at 377.50. This gap fill, they've already filled the gap and then some. The gap fill is at 68.44.
Wow.
The high on that day was 77.20. The close was 74.51. I don't know what your targets are here, what you're expecting out of this stock today. But holy mo! I'll go wide because I don't want to go against the momentum. But man, that 370 to 380 zone, if you've been buying since December, you gotta be. It's up on 298,000 shares. I
The
mean,
problem is the good news.
oh,
Bob did the same story yesterday. It's fading a little bit here, but then it went.
different story.
Different story, but it's never a great idea to fade. Usually it's not. And so on some of these that the volume isn't high, but this has been trading up and climbing and climbing and
Yeah,
climbing and climbing.
I know.
So it's not like it's like, oh, it's oscillating and it's still chopping around trying to find its spot. It wants to be higher. It's never a great idea to be early on these trades. Like if we look even back to like Palo Alto Networks, that had the big pop and then it faded for a couple days, but then it kind of held on here. I'm just trying to look at the history of the solid earning beats here. Meta, obviously the gap up, and then it pulled back a little bit and then eventually started climbing again too. I'm more inclined to buy the dip, like not saying this is obviously not a dip, but you get the 375, just coming in here and saying I'm going to short it here.
No.
It's went as far, you almost think it's come this far. Why not test the February high of 386? It's a better number.
Yep.
So I'm like, if I was so inclined to short it, which I'm not shorting, and if I so inclined was though, I'd rather be up there at the 380s and I'd be early here, and then it's your 10 points underwater. But these things, the big earnings beats haven't faded that much. Some of them have, but a lot of them haven't.
I'm just looking for, I'm not talking so much about a fade here, but I'm talking about if you had the, any kind of the weekly options or something like that, at least roll them out or do something. I mean, that, to me, that's just a big move. And I'm talking more about an exit than trying to fade it. But let's move on. Micron trading into green here last time I looked.
All right, let's get to Micron Technologies here as they gave their earnings. Micron Technology Q2 EPS at a loss of $1.91, misses the loss of 81-cent estimate. Sales at 3.69 billion, missed the 3.72 billion estimate. Q3 23 adjusted revenue to 3.7 billion plus or minus 200 million. Versus a 3.7 billion estimate. So pretty much in line. If they get plus, that 200 million, they could probably beat it by just a little bit. But yet, seems like the market liked this.
No, it doesn't even matter. It seems like this was not a good report, Mitch. This is not a good report at all. But this market, this silver lining market that is just so hungry for stocks is just like, well, this was, the dumpster fire quarter and it's going to get better from here. I think that's what it's thinking because this quarter was not good at all. But we're in this environment here where a lot of people are pessimistic, including me, including you, Mitch. And maybe this is just this is what the bulls need. The bulls need stocks start going up on bad news. That starts happening, and bear thesis starts to fall apart. Yeah. So I would say the last few reports, and a couple of these were good. Like Lululemon was fine. It just didn't feel like it was an up 50 quarter. PVH was fine, decent numbers, but didn't feel like it was an up 25% quarter. But that's what we're getting. So you can't argue with the price action. This market wants to go higher. It wants every excuse to go higher. The problem is the news flow continues to bring it down. I believe the news flow is just going to be too negative for it. And that's why I still stay with a lot of cash. But you can't argue with the technicals. The way the market has held up through a banking crisis, which we have in the regional banks right now, is nothing short of incredible. This fear has not come into the market. It's come into certain stocks. I mean, you look at certain stocks like SBNY yesterday and SIVBQ, which is always traded on the pinks, now on the bulletin board. And you see shareholders completely wiped out. SIVBQ now 39 cents, SBNY trading at 10 cents, 13 cents here. from $70, and you think, wow, look at the risk that was there. Thing closes at $100 and then opens back up at 13 cents. I mean, makes me not want to invest in any regional bank ever again. But this market doesn't have that fear. I have the fear. The market does not.
Okay. Boom, boom, boom. Micron. We gave this level here on the closing print. This is a very big level here. 3 highs in the same area. 60. Let's just call it 6150. You haven't touched it yet. You're getting close. That's the area. That's where the sellers made a stand. So 3 highs in the same area. That's good enough for me. I'm not going to call for support here. If this starts to reverse, if people start to change their mind on this thing, the top of yesterday's range was closer to 60 at 59.87. So that's not too far away. But I switched over to the Micron earnings, but what I should have done is we should have talked about the UBS, and UBS going the opposite way on retail today. Dennis,
Let's do it.
Yeah,
so,
let's go to that, Mitch.
Did UBS put retail on sale today? That's the question, because with their analyst ratings coming out, Dennis definitely caught a bunch of these. Let us know a little bit about these, Dennis.
So UBS analysts just came in with their selling shoes on here, and I mean something fierce. Downgrading, here you go, downgrading Foot Locker to sell, downgrading Urban Outfitters to sell, downgrading Ross Stores to sell, ROST, downgrading Burlington, BURL to sell, downgrading BBWI to neutral. Initiating on getting away from retail for a second, initiating, this is also the UBS, initiating Zebra BH at a sell, and also Medtronic at a sell. You rarely see an analyst come out with 1, 2, 3, 4, 5, 6, 7 sell ratings here. 4 of them downgrade, or 6 sell ratings, 5 downgrades, all across the retail. So they're obviously not liking something here that they're seeing with retail here. I guess they didn't care about the Lululemon quarter. But all of these stocks are trading down. You would have thought a good day probably for most of retail with Lululemon trading higher. That's not the case, because UBS is raining on that parade here. Foot Locker down 1.9%. URBN down 2.28%. Ross Stores down 3%. Burlington, BURL down 2.6%. That's all UBS.
Wow, they're all trading down. They're all moving this, and the Burlington has been selling off as well. Boy, oh boy. I mean, this seemed to get the momentum going. So I'm not really going to check. You can keep an eye on the pre-market lows in some of these stocks. I'm not looking to see. All right, so there was Burlington, there was BBWI. I mean, major support at 34. That might not help you today. Ross Stores, kind of a thin one. Ooh, losing $100, nowhere to go there. Looks like you're going to gap fill. That'll be a good gap fill, because it was a triple top just around 98. For all these, if you're looking, to get out, maybe look at the bottom of the previous day's range, or if you get really lucky, if a swoop, buyers come in, maybe you'll see the closing price. But it feels like this UBS downgrade of the retail has some stickability, and I don't think I'd be fighting it.
When analysts come in with a sell rating, the street notices. It doesn't matter who it is; they take note, because analysts don't come out with sell ratings every day. When an analyst comes out with 6 sell ratings, the street's going to notice, and the street is going to hit those stocks. So obviously, they're seeing something in retail they're not liking. I'm with them, man. I'm thinking the consumer is going to get strapped for cash here eventually too. I think credit's going to get tighter. I think this banking crisis is just in the early innings here. The market does not think that. The S&Ps think this is 2 and done. We got the SIVBQ trade now, SBNY. Shareholders get wiped out. Fine, that's their problem. We're buying stocks because we're eventually going higher here, because the Fed is going to pivot now. That's the bull argument. I'm not in that camp.
Yeah. Yeah.
And I may be wrong. Maybe I'm sticking bearish too long. Maybe because the pivot is coming, and I believe it could be coming, but I believe it's coming for the wrong reasons. So far, we've kind of went nowhere, though. We can say, oh, yeah, you've been bearish for a month, you've been bullish for a month. The bulls, it's gone nowhere. The bears, it's gone nowhere. We probably continue to chop around until we get more information. And I think the information flow is still going to be negative.
I'm going to wait till Friday. Why
Friday?
It's the end of the quarter,
Okay.
and I'm gonna
Good
because
call.
January up, February down, March back up. Who knows about April?
Sure.
We're coming into I know we're coming into earnings season. Actually, I just looked. Delta, I think, is April 1st, and you got the CPI. So I'm gonna work my quarterly magic over the weekend, and I'll come up with some levels to follow. But until I have that date on Friday, I don't know. Days like this, man, you're thinking, holy mackerel. But I just want to point out the high close from last week, folks, before Powell, got all crazy on us, was
Mhm.
40-35-75. So that's my line in the sand for like what's problem. I don't know. I'm just wondering if he like has a good feeling about this good feel. I mean, they got to have more information than they're revealing, but like you get halfway decent earnings or good reactions to earnings, no matter what they are, and a soft CPI, then then your pivot is here. I'm not ready to jump in the bull camp yet.
And again, we've really gone nowhere. So Bulls haven't won here, Bears haven't won here. We're just chopping around. So I mean, and it could go. You can see the bull case. The bull case is that we don't have any more bank failures. That inflation continues to tick down, and the Fed can now stop raising rates, and we're going to start going into thinking about a potential pivot and lowering rates. So I mean, that's the bull case. It's there. It's not impossible to see it. I just think there's more pain before we get there.
Okay.
All
All right.
right. Now let's just to put a bow on retail, I'll bring in at least the Macy's news today. If you guys see why Macy's is down here, Macy's CEO is going to be stepping down, retiring next year. So don't know how much this is going to affect the stock today, but you guys can clearly see Macy's already down in the pre-market here as the CEO said to step down sometime next year.
Surprised actually, because let's be honest here, Macy's hasn't performed that well over the course of the last year either. So I mean, sometimes they applaud when you're getting new leadership coming in here. In this case, they're not doing it. I wouldn't be surprised if this turns around though.
All right. Any levels for Macy's, Joel?
Man, there's psychological level like this 17 here. I'll focus. Ooh, last week's low. Well, you got three lows under 17. So and that was coming on Monday and at the end of last week. So you have someone nibbling between 16 and a half, 17. Let's see if they still have that appetite today. I don't even think you've gotten there yet. Yeah, you snuck into the 17 handle with a pre-market low of 1690. I wouldn't be surprised if there's something in the book at 17 because you had all these lows in this area back in October. So if you thought you missed a big rally, you wish you would have bought it in October. Well, you're going to get your opportunity here on this Wednesday morning, it looks like.
Let's go to the next one here. Of course, I don't know if you guys are still complaining about your egg price, but let's go to Cal-Maine Foods here. As they reported their earnings, Q3 EPS of $6.62 beat the $4.78 estimate. Sales of $997.49 million beat the $888.21 million estimate. So nice little beat here, but not getting the love that I thought it would get on this report. You guys think about
Lower beta stock. Lower
yeah.
beta stock, getting a little bit of lift. Is that 9.43% dividend? Was that a special dividend or something? I'm looking at a yield of 9.43%. I don't follow this company closely. I got to assume that was like a one-time dividend or something. That this isn't sitting here with a 9% dividend. Like I got the PE on this puppy of 5 and a yield of 9%. I can't see that. I know it sounds too good to be true. I think chat maybe you can help me out here. I do not follow this stock whatsoever, but I'm just bringing it up here and looking at this with a 9% dividend and a PE of 5 and thinking, man, there's got to be something else going on here.
Well, we'll do some digging on that. This thing just pops out to you, right? Four highs in the same area. So 56.5, that's the point of control here for the Bulls or the Bears, whatever you want. But that's a big level. After that, things open up to the upside, and that's like I can see where to buy this thing up $1.73. I would be a chicken and I would say, oh, I'll buy it at the top of yesterday's range, which is not too far away, 55.74. So maybe you can get this on a gap fill, but I don't know. If it turns around, they decide to sell into this. The close from yesterday is down at 54.27.
Do they ever make money? I'm just looking at these quarters. Looking back to July, $2.25 being the $1.84, then $2.57, and then they're making $4. I mean, holy, their earnings are just fine. Now they're making $6.62 this quarter. How are they printing money like this? Is this egg prices? Is this what this is? Just the prices of eggs, $6.62 versus $4.78. Is this the price of eggs? That's driving
I'm hiding
this?
those eggs, baby. Hiding those eggs. You never know.
Well, we can see who's making all the money.
I used to be
Holy mackerel. Yeah, price gouging here. Holy mackerel. Cal-Maine Foods, they're making so much money right now. They made $6.62 this quarter, Joel. I guess it's not going to last, that's, because this thing with the PE of 5, but man, they are a printing press here right now.
I used to be allergic to eggs as a kid. Could never eat them. That and mustard, but I outgrew both those. But now
somebody's got to look at this. And you're like, where, like, this is unbelievable.
Can't get off.
I can't believe this. Like, you've got, so many of these politicians here, going at big tech and going at this. I mean, you got egg prices that are soaring through the roof, and you got this company just printing money. What's going on?
Easter egg hunt shortage or something.
Oh, Easter coming up.
Somebody is just killing it here, and it's Cal-Maine Foods. Makes me want to own it, but I just can't see egg prices and all this sustainable. So I think this is like inflated earnings, maybe as good as it gets. But wow, I mean, the stock performance itself has been pretty crappy considering how much money this company is printing here right now. Shows you how disconnected this whole market is from fundamentals, really. Like here's a company that's just a printing press right now. Maybe it doesn't last, but PE of 5, yield in 9%. Somebody says yield in 6. My system shows 9. But I just can't get out. I never really looked at the fundamentals of this company. It's insane.
I'm gonna try.
Chart looks like crap, though.
I don't do the CEO reach out much, but I'm gonna see if I can get someone from Cal-Maine Foods to come on since we just.
We're gonna say, why are you price gouging your customers here in printing press $6.62?
Oh, yeah, Dennis, you're so good with people. That would be great.
I'm nice. I'm very nice. Go.
I stole the Easter egg squeeze from ScarJo Rabbit.
Oh yeah, Easter's coming, so you got to buy more eggs. That's going to be another catalyst. The Easter eggs. But people are saying they never went up like that in Canada. Like, how much were you paying for a dozen eggs? So you got the peak. We never went up much in Canada.
I don't really pay attention.
Like everybody was complaining about it, but I kept going to the store and I kept seeing my dozen eggs for like $3, $4. And that's Canadian dollars. So it's like $2-3 US. I never really saw the big jump up in pricing.
I get the egg whites from Costco. I don't even know how much. I guess I should be checking the prices on that, but you get a big carton of that. But Dennis, we got a compliment on your hair today.
Is it good today?
Yeah,
better today.
Well, I made you comb it yesterday for our promo for our special. I should mention that on I
even wore the Michigan
Monday
shirt for you because you gave me compliments here. So
yep,
you were complimenting me yesterday when on the promo that I looked nice. So I wore a Michigan shirt just for Joel.
April 3rd, we're going to be doing our special from noon to 10 over on PreMarket, or noon to 10 to noon on PreMarketPrep.com. Super lineup we got. Todd Gordon, Angie Setzer, Gene Munster, Cameron Dawson, Blue Putnam, Michael Hewson, and JC Peretz. He is not going to sugarcoat anything, so we'll be out. I want to see everyone there for that. We're Spruce sell off a little bit. We're still up 31.5 handles. Just a little bit of a leak. Nothing to get alarmed about yet. I don't think we have any 8:30 numbers or anything going on. We have a few minutes before our guest.
Yeah, I'm slightly
Mitch.
Under attack here too. I don't know.
Slightly under attack, but no one can see it, Dennis. So
I'm
I
under
love
siege here.
I like the new layout because no one
I'm
can
under
see Dennis
siege.
is getting
Layout
attacked.
hides the girl. The girl has a doctor's appointment in a couple hours, so
she wants to get on
she's
camera.
home with me right now as my wife takes the boy to school, and I'm under attack here.
Well, since she's there, we should mention like Dave and Buster earnings, right?
Did you give her
She's a little young for play, I think.
Did you give her toast?
Toast?
I gave her waffle. She should be good, but she's here. She's going to draw something. You want to draw something for the show? Okay, draw something for the show, and we'll show it after.
There you go. We
There
got some
nice,
live art.
nice.
Live art in the background.
Yeah,
No
live art.
AI.
It's Art
No
Hub
AI
now.
on that art.
Pre-market prep art hub.
All right.
I'm
let's
making
go
an
ahead.
NFT. Make it an NFT.
Oh yeah, they will do that too. That's how they roll.
Go ahead, Mitch. I'm sorry.
No worries. Do you want to do Dave and Buster's really quick, or should we go
sure.
guys?
Sure.
All right, let's rock it out really quickly. Let's take a look at play. Dave and Buster's earnings came in. EPS 80 cents, beat the 73-cent estimate. Sales of 563.76 million, beat the 541.39 million estimate. They did approve a repurchase program authorizing up to 100 million of common stock through the end of fiscal 23. I would say I've been at a Dave and Buster's lately. It was a couple months ago, but man, they were definitely hurting for employees. It just seems like everybody's running on three wheels out there. Anywhere you go, it's like they're running on three wheels.
It's tough. You go to some of the restaurants and you can feel it. You know, your service a little bit slower, and they're like, apologize. You know, we're short 2 waitresses. I'm like, holy. I mean, this is just the way it is right now, and it's still that way. Labor shortage. It's hard to see labor prices coming down when you can't even get people to work. So, yeah. But play, I don't know. This has been a dog for a long time too. Here, it just kind of goes nowhere. I mean, look at the long-term chart. Bring it up here.
30 to
we
40.
just kind of hang out. We're where we were in 2015, or where we were in 2016. This was instant art here, so this is what you just drew right now.
Let's see. Wait,
that's what you just drew.
That was
a 1 minute project.
That's an NFT right there.
There you go. The 1 minute project. Do you want to continue on a little bit more? There's your thing. She's going to continue a little bit further.
Okay. The adult Chuck E. Cheese. I use that line all the time.
Yeah.
My son-in-law loves that place. He went there for his birthday. I went there for a one of the Fiesta Bowl parties, and I literally got a headache in 5 minutes. I gave my tokens away to people because I didn't want to play the games and get the hell out of there. You got a low at 33.44, which may come into play today. You didn't quite get there in the pre-market. Really, no area of like super support. This low here was 32.25, trading down on 5,000 shares.
All right, we'll see what happens there in play. And I would say that definitely Chuck E. Cheese's pizza is better than Dave & Buster's food, but that's just my opinion.
I've not been to it. Are they still around, Chuck E. Cheese?
Yeah, I think they still got a couple out there.
They're still
Dennis.
kicking around. They used to be here in Windsor, where I lived for a long time, but I don't think it's even there anymore. Maybe they are still in Canada. Let us know if there's still some Chuck E. Cheese. I bring my kid to a Chuck E. Cheese. I don't know where there is one.
Hey Dennis, I forgot to mention, did you before you moved, did you know they built a really big pool in Windsor, in downtown Windsor? Did you know about that?
Yeah, they had that for a long time.
Time?
They've got some awesome, indoor water parks there in Windsor.
Oh, this is like a competitive pool. They're having like the Canadian. No, I think this is kind of new.
Oh, okay.
They're having the Canadian National Championship.
Joe knows about the new
indoor water parks downtown.
Yeah.
You don't test.
Are you going to go compete,
Joel? Knowledge.
Are you competing in this?
It's May of 24. Yeah, because I'm aging up next year. I'm thinking of making a big run next year.
There you go. He's going to age up, and he's going to kill those other 80-year-olds.
Yeah. Okay. All right. We got a CEO coming on.
Let's do this.
Yeah, let's do it. Go ahead, Mitch.
Let's roll it, team.
Hi, good afternoon or good morning. I'm going to bring on Rob LoCascio, and he is the founder and CEO over at LivePerson. Rob, how you doing today?
Good. How you doing, Joel?
Good. Thanks for coming on the show. We're looking at the last quarter here, and the street did not have a great reaction to it. So I really respect you coming on here and talking to us about your stock. You've been at this game for a while. Give us a little bit of your background.
Yeah, so I started LivePerson in 1995, and I invented web chat in 1997. So I invented the technology when you chat online for customer care. Took the company public in 2000. That was one of the last internet IPOs. We went out at $8, went down to 7 cents a share. That was the lowest share price, and then built it from there. And then we made a big pivot into messaging and AI about 7 years ago. So we work with the largest brands in the world on providing their AI and automation for customer care. Now it's going wider than that, but if you go to the Citibanks and T-Mobiles and Home Depots and companies like that, and you message and you're communicating with them through customer care, that's our platform. So yeah, this is my 23rd year running a public company. I think I'm the second longest serving now, behind the NVIDIA CEO in the tech world. So I've been through a lot, and I've seen a lot, and recently I've seen a lot too. So
yeah,
yes,
definitely.
I don't shy away from these things. So
right. So you made a big decision last quarter. And you felt that we talked earlier about it. You thought it was something that was necessary, something that had to be done for the future of the company. What the street's reaction is going to be, you never know. We see what the street's reaction was to it. Lay out your scenario. What prompted these moves? What are the obviously there's short term negatives, but what do you perceive to be the long term benefits?
I mean, we were, AI and everything that's going on now. Most people know about ChatGPT and OpenAI, and we are servicing the largest brands in the world. And matter of fact, last year, Fast Company chose us as the #1 AI company, and OpenAI, who makes ChatGPT, was #3. And when you look at what's happening now, there's an acceleration of this vision I've had about, having automation in our lives and having these personal assistants in our lives. Well, during COVID, like a lot of tech companies, we got into different business lines. Our customers asked us to do things during that time, and we got unprofitable. We started to burn cash. And for 20 years, we didn't burn cash, and that's how we got here. And for the last 3 years, we burned cash in our negative EBITDA margins. And so we did a big cleanup, and our final cleanup last quarter, we took out about 70 million in revenue, which was non-core revenue. That was low margin revenue for us. That, yes, our customers want us to do things like labor, contact center labor. We got into a COVID business because one of our customers wants to do COVID apps to bring their employees back to work. We have a joint venture in the healthcare side that we spun out now. And there were different businesses we got into. And I just said, once and for all, we've got to be done with this and start generating cash. So we dumped that revenue, and now we're generating cash and positive EBITDA. And we're back to what got us here. So I just felt like it was a lot of puts and takes. I know it was potentially confusing, but going Q2 forward, like we're back to being the company of generating cash flow and double-digit EBITDA margins. And now we got to get the growth engine going again, which we will. But that's what we did. And it was ugly. I knew it was going to be ugly. I didn't want that to happen. I didn't think the stock would respond like that because of the nature of people want profitability. We want profitability, but it's the right thing to do to allow us to now focus and execute on the long-term plan.
Rob, talk about the long-term plan. Talk about the turnaround story here. Where, if we're coming in here and obviously LPSN stock is very low here right now, talk about the potential for a turnaround here.
First of all, we're trading below 1x revenues, which is ridiculous. We are a leading AI company. Like everything that's going on with AI and everything that we see, we're going to bring that to the largest brands in the world where they're trusted, platforms for this type of technology. So there's a disconnect, AI is going to be in every place in our life. Everything that happened with ChatGPT, that's the stuff we are bringing onto our platform. The ability to talk to a machine, for it to do our work. It'll definitely, our vision in the last 5 years has been to get rid of contact centers and human beings answering questions and doing phone calls. That will accelerate. That was the core thing I've been talking about for 5 or 6 years. Like, we got to kill the 800 number and calling. And now we can replace all of those conversations with the machine. Like everything now that I've envisioned for the last 10 years is coming true. And so, yeah, it's odd. It happens. Trading below 1x revenue as a leading AI company, making money, we're profitable. Like there's a lot of things that don't add up. But what happens is I know, been doing this a long time. We just got to put up the quarters and show, what we're saying can be possible.
What about the businesses that you spun? Like you spun, you're obviously, you know, changing your focus here. Can you talk about the specific like businesses that you're going to now be focusing on? You know, you talked about, you know, we got to get the growth back. You know, what do you see as, you know, how do you get the growth back now that you've spun off some of these other businesses that weren't working?
Look, the growth's there. I mean, we took out 200 million. We actually took out 200 million in the last 12 months in expenses, and that there's a certain amount of focus you have to do with that. And there's a lot of restructuring. We restructured the business around the opportunity to accelerate it. We did just sell off a business we had for 13 years. That was a chat business. That was humans giving advice, like tech support advice and things like that. And we sold that because we see such an opportunity to transform the enterprise and these large brands that we work with this core technology. And that's where we want to put our focus on right now. But look, when you do that type of cleanup, you know, we took out about 300 and something people 2 weeks ago. That was the last portion. I think over the last year, we took out about 900 people to get more efficient as a business. When you go through that, you know, there's a lot of focus on cost savings versus growth. And now we cleaned up the P&L. And look, a lot of tech companies, especially B2B companies, they don't make money. And it doesn't make sense to me. And even when we weren't making money, at first it made sense because there was a massive growth during COVID and everybody wanted bot systems and contact centers were shutting down, and we started to overinvest. And if I could go back, I would change it. But the bottom line is we made the change, and now we can move forward. But the focus is on growth. And what's going to accelerate the growth ends is just focus right now, bringing the large language models onto our platform, which we're doing. So there's no real big change in the business. It was just that we got caught into over investing in the business. We had too many people, too many things going on that weren't core. And now we're a clean company with a focus back on that core.
All right, I'm going to hop in here. I know that you've talked about, and I appreciate the full transparency, some of the negative things. Let's highlight some of the good things that happened in the recent quarter. I have your presentation here from the recent quarter. You guys just presented earnings on the 15th. Let me know a little bit about this.
Yeah, so Q1 will be our last losing quarter on the EBITDA side, and now we'll have double-digit EBITDA margins somewhere between 13 and 17%, and then cash flow margins of somewhere between 5 and 7% this year. So Q1 will be the last where we burned money, and then we signed 44 new logos. That was 63% year over year. So you can see there are growth parts of happening, and now we can basically focus on those as a company. You can see we continue to sign our new logos, renewing our new logo, renewing our customer base. The interesting thing is, like, it's exciting. I was literally just on the call with one of our large car companies. We have a handful of the large big car companies, and we were talking about automating the user manuals for the car. So, like, you can ask, what's the childproof features? How far can I be from the car to open the doors? And then we were talking about also automating the technical manuals, conversationalizing the technical manuals that the people who do the service, in the service department use. Normally they have to go through that thing, but you could talk it through. So all these big brands we have, there's so many interesting use cases now to, like, take all the stuff that you're reading and manuals and PDF files and conversationalizing that. So all these types of brands that we're seeing here is really about the base, maintaining it, and then accelerating it.
We're on the line with Rob LoCascio. He's the founder and CEO of LivePerson, joining us here on PreMarket Prep. Rob, I got to ask you the question here. There has to be some envy here. I mean, some of these other stocks, this C3.ai Inc. has just had a tremendous run, and stock hasn't been around as long as you. We, talk about that. I mean, are you looking for, any strategic partnerships or something down the line? I mean, Google with Bard, it's been up and down, but just comment on the competitive landscape out there and possible strategic partnerships.
Yeah, I mean, from us, you should see some, things happening. There are big cloud providers we're already partners with, but you'll see some things, I think, from us on that side, because the technology stack now, what's interesting for even these guys is that the guys provided, whether it's a Microsoft or OpenAI or, there's a bunch of these guys, they want us to bring this to the enterprise, and that's really the key thing, is that we have these relationships. We have customers who've been with us 15 years and they've transformed their businesses with us. And we have a platform that they're using that's AI driven. It's our business. It's not a piece of our puzzle. It is our business. So they're trusting us to bring this technology to them. And so for those big partners in the world, they need a conduit to get those enterprises, and we can make that happen quickly. And so I think what you're going to see very quickly is we're going to have the largest brands in the world using this technology. It's safe. If it's not on a platform like ours, it can run amok. They say it hallucinates. The AI makes something up and it's not real. But on our platform, it's always real. And so that's what the large enterprise need. And so it's an exciting time. I go back to it, like all the brands are just like, we can change our business. They need a platform to do that on. We've got the largest set of enterprise brands to do it with, and they trust us, and we've been around. So it'll be interesting where we go from here. Like I said, you get bruised up. I've seen the stock at 8 cents a share. I saw the stock during the financial crisis. I think it went down to $1.70. I've seen the stock in many different places. Luckily, the stock has no memory. It continues forward. And as a company, we're excited about our future. That's why we were not in a defensive position. That's why I wanted to be on the show. I'm not sitting here, oh my God, we're going backwards because the stock says that. We are in an offensive position when it comes to AI. And AI right now is the greatest transformational technology, since the web came out, since the internet came out, and we're going to bring it to the enterprise.
All right, Rob LoCascio, founder and CEO of LivePerson, coming on the pre-market prep here. I say, Rob, great job here. A tough position. You come up and you made your stand, and really respect you. And we'll be keeping a close eye on this company. Thanks again for coming on.
Thanks a lot, guys. Thanks for having me.
All right, let's go ahead. Let's peek into the markets. How we looking, Joel?
Yeah, just a little bit of a leak here. Nothing to get alarmed up. We're still up 31 handles, but I think those late buyers, this range bound choppy trading. I mean, it's gonna persist. This would be one of those days where if you're looking through follow through the pre-market high. Oh boy, oh boy. I mean, you better play it tight. That's if in fact we get up to the pre-market high. But that's what I'm looking at. Last print up 31 and a quarter handles at 31 handles at 32.50. Lulu, could this be one of those days? And it's not investment advice, but you don't see the pre-market high as the high of the day. Mm-hmm. You know what I mean? This thing just think about that. This is kind of it trades kind of heavy, right? Dennis, look at all these updates. If you were playing this into the report, I mean, there's got to be orders at where to close at 320, 325, 330, 335, 340, 350, 360, 370, 375. I mean, and you're going to be a buyer on the open up 16.5%, filling a gap. I don't know, Dennis. I mean,
I don't chase, but I can see why some people are doing that, because it has been working. I mean, it worked yesterday in PVH,
but it wasn't easy. It wasn't easy. It wasn't easy. That thing would.
Well, I would say it was very easy. Where did PVH open? I think it opened right at that low.
It just opened and just went up, right?
Yeah, I think it did.
I got an open at 84.90 and the low at 82.40.
Yeah, but that's all in the first bar. So what happens here, and I can explain the mechanics to the opening. So let's explain, opening mechanics here. What you have is the primary exchange, and I don't have the quotes, but I could go bring it up. Let's just go. I wish I could show my screen actually, but I'm just going to go into yesterday's quotes, and look right at the open and see exactly what happened here. So we're going to the 28th. We're going to go into the opening bar. Here we go. I'm going to look at the quotes because I have this on my NeoVest. I can look at every single trade that occurred yesterday. So if we look, it was running up into the pre-market. You're right, Joel. It ran up to around $85 in the pre-market. We had an opening print of 84.64, 35 seconds after that opening there. And you're right, we did leak. We leaked down in the next minute. We lost about $2. So you're absolutely right. We lost about $2 in that next 30 seconds. But then we started to blast off, and then literally going out about a minute after that. So 9:32, we're back up to the 84s where we opened, and then we continue to go higher at that. So there was a shakeout there, a good shakeout. So what you're right, it wasn't easy. It's not like it opened right at the lows. It opened in that opening bar, but that opening bar is the first few minutes there. So there was a shakeout there. But sometimes what you see happen is you get that opening print where maybe it deviates from where the stock currently is, and sometimes there's other exchanges. So what you have is a consolidated opening where what is the first tick at 9:30.00, and some of your systems will pick that up. So the first tick actually was 9:30.06, 84.90 on ARCA.
Okay.
But the actual stock didn't open on the NYSE until 9:30.35, which was 30 seconds later at 84.64. So the opening mechanics on the New York Stock Exchange are a little bit different because you still have the designated market maker opening the stock, and that's your official opening price. Yet it still opens on other exchanges. It's open the whole time, so it's a run time. But some people will take that consolidated opening. What is the stock trade at 9:30.00? And that's not really where the New York Stock Exchange open is, because the New York stocks often open significantly after 9:30, sometimes a few seconds, sometimes a couple of minutes if they can't, get it, figured out exactly where it is. So that opening bar is kind of always a little bit of a mess on NYSE stocks because it doesn't open instantaneously like you see on the NASDAQ.
Yeah, that's what I do on those I look at those kind of things, and sometimes they just open at the dead low or the dead high, or the book holds it in one place. But Dennis, that was incredible explanation. If anyone has any questions about that, throw it out there. That's kind of a little bit of a high level subject, but that's what we like to discuss. We like to give you guys things that you don't get on your regular broadcast news. So 8:53 here.
Yeah, this
pop
market
in the
is
spruce.
very interesting here today. It's a very broad-based rally. I'm not seeing anything really trade down besides if it didn't have news. Obviously, Macy's had news. We know that's trading red. But when I'm looking at my screen here right now, I see all those UBS downgraded stocks trading red. And then I just see everything is green. Like you're struggling to find stocks that are in the red here today. So it's a very broad base. And again, the news stocks, take the news stocks out. I'm not seeing any sectors really weaker here. Like sometimes you come in, okay, well, they're going to hammer the consumer staples today because it's a risk on day. It's not the case. They're actually buying consumer staples today too. They're buying healthcare stocks today too. They're buying banks. They're buying tech. They're buying pretty much across the board, but they're not buying anything heavy. They're buying everything like up that like 1%, what the market is. It's like very broad based. Usually there's pockets where, you're seeing tech up 2%, but you're seeing other sectors down 1%, and then that equals the market up 1%. Today is just very broad based. Even look to the IWM, which is very interesting. IWM has been trading with a beta much higher than the SPY lately, but today IWM is up exactly the same as the S&P, and then you throw the QQQ, and it's almost exactly the same as the SPY. So we were saying how that inverse correlation was there between the IWM and the Qs. That is not present today whatsoever. It's kind of a buy everything market here today. So that's interesting.
All right, let's go to our TradeZero segment today and see what stocks are on the gaps. All right, team, let's get into the action. The top stock is a therapeutic stock, actually. It's not Lulu, it's ARCT. Of course, therapeutic stock. Be careful out there. They have been moving, though. I've seen some of these biotechs really getting to move as of late, especially anything that has like mentions of drugs. Just keep an eye out on that kind of phase. I think this was a phase 2 mention here, but let me just adjust here. It was quarterly beat, and cash runway extension. So runway extension. So it looks like they were able to get some cash and continuing to push here. We'll see if it gets back there towards the 2150s. Lulu, we've already mentioned, of course. We can keep going from there. Coinbase getting a little bit of a bounce back today. Is this something that you would take a shot in or stay away? What do you guys think?
You know what? The Wells notice is scary, but what I will say is if we go into more of a banking crisis here, which I believe is still coming, I think Bitcoin continues to go higher, and you're seeing Bitcoin starting to break out here again. So short term, I'm still bullish Bitcoin here for the simple reason is that I think there's more banking problems ahead, and Bitcoin's a natural place to go and hide. So I do think eventually they start to gravitate back. Because we don't hear more news. Obviously, if we hear something substantial coming, and the SEC is going to be suing Coinbase, things can change quickly. So there is the potential for, a tape bomb here in Coinbase with that Wells notice out there. But as we hear, as we go days, by here and don't hear too much more about it, that, it's going to probably eventually bring buyers back in. So it wouldn't surprise me if Coinbase starts to find some buyers and some dip buyers coming in here.
It looks
And
like
Square found those dip buyers too.
Yeah,
it took a couple of days, but Square has been trying to bounce back, which I felt the sell-off was absolutely ridiculous, is really what I thought. I said it on the show. Stock was 63.5, and then I watched it go down to 57. I was like, holy mackerel, was I early on that one. It has started to bounce back here. I do think eventually, I kind of like Square on the pullbacks, except the valuation. So I'm not in Square. I haven't been in it, but I still think that move down was a little bit overdone.
Yeah, coin looks like you got some room up to. There's some daily highs. You had that Wells notice, and can't get over 66. Your first target on the upside, that would be 67.60. That was actually your high on Monday if you're looking for a target. So 70, you get into the gap area in Coinbase.
We'll see what happens there on Coinbase. And yeah, a bunch of kind of crypto stocks moving today as you're seeing Bitcoin a little bit higher. So keep your eyes on some of those Bitcoin stocks today. Even the miners were up a little earlier. But like Dennis said, there's a lot of stocks that are up today. Let's keep
it's
moving.
Really broad based. This is the first day that I've come in and I'm like, well, there's no pockets of weakness here, which is surprising. Now, things can change very quickly, and maybe at 9:30 it's going to separate and we're going to see some separation. But besides those downgraded retailers, I don't see very many pockets of weakness here today.
Yep, let's keep moving here. Let's take a look at some other ones. Tesla bouncing back a little bit after making a low yesterday at 185.43. It's back to 192.40s. Do you see higher than 200, or do you guys see below that 185 kind of gap zone? What do you guys think?
I just see major resistance at 200. So I think there's no reason to get long this thing until it can reclaim 200. Again, the banking crisis is still, we keep mentioning it multiple times every show because it's still out there and we're still not past it. I can't get interested in Tesla unless it starts to get above 200 really from the bull side.
Yeah, a little bit shorter term here. You're opening right into the previous day's high, 92.36. And that was really near your 2-day close, also your 4-day close. So the bulls want to make a stand here. They'll get a 192.5 bid. Things open up after that. 197.39 is your 2-day high in Tesla, but kind of quiet ranges here after that tremendous January run. Little bit of tail off in February and March.
All right, let's go to an interesting one here. DG, Dollar General here. What do you guys think about DG?
They were on the cover of Barron's. And,
that tells us a lot, right?
Yeah, it was negative too. There was the old negative. The price is wrong. And I skimmed the article, and it showed like, this cranberry spray juice is $1.89, but then you go to the register and it's like $2.12. But obviously the street went the other way with it. Monday was a little bit of a down day. Interesting level here for me would be this let's just call it 212. If you go back to last week and the prior week, you had 3 highs in that area. If you're looking at it from a bullish scenario, but first things first, you got to clear that high from yesterday, 210.42. Guys, I'm gonna let you finish up and hop. Great show today. Thanks to Rob LoCascio for coming on, and go get them, guys.
All right. I mean, we could take a look at some down gappers, but Netflix has been strong as of late. What do you think about this Netflix recent move? I know I've been watching it.
I think the subscriber, if they're going to start cracking down on that, I actually think that's good for the stock. Yeah. So I think I kind of like it in the lower 300s. I mean, we just popped quite a bit here, but if we can pull back here in this range, again, valuation, when I was picking it up and obviously, I had 2 purchases, but when I had the big purchase at the 180, I was on a valuation call. The thing was trading 16 times earnings. Like Netflix never been this cheap. So that was just valuation call. It's not that cheap anymore. I mean, 30 times earnings here. So it's I'd love to see this in the low 200s. I just don't know if you're going to get there. I do love the company. I think that, they create so much content, and some of it's pretty darn good. They're the streaming people. You thought Disney was going to come in, but Disney just doesn't have the content, the amount of content. Disney has great content. They just don't have the amount of content. And I mean, even what I was with Disney before, and I still like Disney long term. I just, I go on the Disney Plus and I was like, okay, the new Mandalorian series. And I was trying to watch it last night. Well, it's not even that good. So I don't know what it is. Like some of these Star Wars series, the Andor one. I mean, the hardcore, Star Wars people really love them. I'm not that impressed, with some of. They've come up with a lot of new Star Wars content, but it hasn't been just, oh my god, that was awesome. It was like, it's okay. It was okay. Like when they first came out with some stuff, it was like kill. That first Mandalorian series was awesome. But like now it's like they're coming out with new Star Wars content all the time, and it's like it's good, but it's not great. So I don't know. I think Netflix is still the company beating streaming.
Yeah, and I think, believe it or not, I think Apple is coming really fast. I know a lot of people don't believe in Apple Plus or Apple TV, right? But their mentions that they're going to get into movies, I think, is a big step for them. And so keep your eyes on that. While Disney just mentioned that we're going to cut spending on content. So I don't know how they expect to be a leader in streaming,
crazy,
but not spending money in content, right? That to me, they're just trying to make money with that little as amount spent on the content. And yeah, it's continuing to work right now, but will that change? I think that's something we keep a close eye on. Let's just take a little peek here at the net down to see what's showing up there. Anything that stands out to us. Of course, you see some kind of retail names like Urban. These are names, smaller names, right, that I've been keeping an eye on, like, let's say, American Eagle, and Abercrombie and Fitch, some of those kind of names. What do you think about those names, Dennis?
I'm staying away from retail for the simple reason I think the consumer gets more strapped here eventually. But yeah, some of these are, some of these valuations are gotten to a point where they're cheap. I still have that little bit of Kohl's, which has just been horrible. And that's like a bad taste in my mouth. I tried the JWN back, long, after in the 20s there, in the low 20s, when I'd pulled back at the huge pop, and then it pulled back and I tried it there, and then it started breaking down again. So I'm like, it's been hard to make money in retail on the long side. So I think once bitten, twice shy for me on retail. There will be a time to buy retail stocks here. I just feel like we're early yet.
Dennis, where I got top ticked probably on, which was, of course, Burlington, as it destroyed me up there at the top. That's the day I got stopped out. That's the day I got stopped out, Dennis.
Yeah, that's what they
do.
That's
how it goes.
They run you, they run you, they run you. I mean, people think, it's easy shorting stocks. It's not easy shorting stocks.
No, it isn't.
Not easy being long stocks either sometimes. So trading is difficult. The psychology behind it all, you can really make you... it makes you or breaks you. I mean, you got to try to separate yourself from the money. You got to try to separate yourself from and just try to put your structured system in place. If you're new, you're trying to build the structure, you're trying to build the systems, you're trying to find the edge. My edge is, a little bit of combination of everything. It's macro, it's individual news flow, it's charts, it's a little bit of everything. And I try to, take that, view and try to put it all together.
And what about the AMC rumors? Did you hear about those rumors?
No, what's the new AMC rumors?
Oh, you didn't hear it yesterday?
No, I did
All
not.
Right, so there was a rumor going around.
I think I have AMC muted in my
Amazon can be buying AMC. So rumors out there that supposedly Amazon would go and buy AMC. What do you think about that?
Zero chance. Sorry.
Yeah. There's just no point, right?
There's some things that have a chance, like go back to Dumb and Dumber. So you're telling me I got a chance. I don't think you have any chance.
That's how it is sometimes, team. We'll see if the rumor does play to fruition, but of course, it's going to be a tough one. We'll find out if Amazon does go after AMC. That's what had that nice little pop yesterday in the intraday market. We'll look to see if AMC can make any type of turnaround, as it's been just kind of on a declining action, right? It's almost back to $3 where it kind of ripped out of, right? It was about $2, then started ripping at that $3. We're almost back to $3. Will we cut through that 52-week low, $3.77? Find out, team. That's going to do it for our trade segment today. Like always, you guys can check out stocks to watch here and get 3 month for free with TradeZero's flagship software. And we're going to start wrapping up. Any last comments you got for the
Everything
market,
rally.
Dennis?
It's an everything rally here today. Let's see if we start getting some separation after the open. Tech is really leading the charge here. It's been rare that you see the bank strong and tech strong together. So that's good news for the bull that you're seeing an everything rally. Makes me feel like this rally could hold a little bit better than some of the other ones when you see everything rallying like this. I mean, we always look under the hood and it's like, I'll say, the market's up, but banks are tanking. I'm like, how did this stay up without the banks? In this case, we kind of got everything up today. I mean, FRC was trading the red. It's still trading the red. That's a little bit of a red flag, but there's still all the other banks are trying to trade higher here today. So as long as the banks can stay up here today, I think the market could potentially hold this rally. But, maybe we go into the end of the quarter. Maybe they try to jack it into the end of the quarter. You have to consider those effects. I mean, we're 2 days away from that. Typically, we are strong into the end of the quarters as money managers pushing stocks. So I don't know if that's going to continue here or not, but it's something to think about, especially if you're short.
Definitely something to think about. We'll see what happens today. Dennis, you go do what you do best, my friend. Get to
Thanks,
your trading
Money Mitch.
action.
See you, chat. Great chat here today.
Take care, Dennis. All right, Dennis is out of here. Definitely check him out, like always, on his Twitter. And stick around, team. We got another great day for you guys. Of course, we'll have some live trading and then a little bit of some all-access action. That's going to be coming up right now, starting at 9:10 here in about 2 minutes. 2-3 minutes. And like always, you guys can keep growing your skills. Of course, Benzinga is the #1 place to grow your financial journey. So if you guys want to continue growing, come over, come learn from the Japanese candlestick charting techniques. We're killing it. I really think last show was the best show we've ever done. We went through real life examples, charts on the dailies, showing these patterns. And I think that that's really important, right? Because there's one thing reading this book. There's a whole nother thing if you can actually start recognizing the patterns. So smash the like, guys. You guys can definitely use different charting services to recognize these patterns. But if you actually understand how these work, it's going to give you that edge. Smash the thumbs up. I'm going to throw the link there, team. Now to get you guys over to some live trading action. Of course, we got Ryan back. Zunaid will be out, but you guys come over, check out what we can get into today. It's going to be another tough day in the market. It's never easy, but one thing's for sure. We'll keep battling with you guys. Smash the thumbs up. I'll see you guys over on live trading now. And of course, hit those likes. Come on, man. Don't be stingy, guys. We definitely try to help you guys out, give you guys the pre-market outlook here. And you guys, do us a favor. Let us know. Do you like the show or unlike the show? I don't even mind if you unlike it, right? The key here is just to give us some feedback so we continue to do better for you guys. We'll see you next time. And now come over. You don't got to go anywhere. There's more action right here on Benzinga.